In this video, we are going to be analysing MULN. It is up, one of the leading gaps today, being up over 56% as we're recording this video. So to get straight into the technical side of the analysis, and quickly I do just want to note, obviously these are technical levels. So if some fundamental news that comes in, they may blow straight through these levels. The technical levels should only be used for entries and exits, but really you want them more in a steady market. If there's news, that's always going to be the key driver. Go with the news, or go with the rumor. Usually play against the news because then it's getting confirmed. But anyway, into the technical side of things, what are we paying attention to? So really our closest or kind of key resistance would be $1.05. So very far off from where we are now, but this is a level where we would turn more bearish on MULN and look to probably start shorting it, or at least get a scalp short or a day trade short coming into that level, because we would expect a relatively big pullback coming into this level. Now one level to note though will be then the statistical mean at 33 cents, so basically where we are now. This is the statistical mean on the 6-month chart, so this is quite important. If we pull up more of the intraday chart, we can see we have broken through, come back to retest it, and what is really actually key and kind of good to see if you're more bullish on MULN is that we broke through this level, we came back, and as we always say, we want to come back and test it as a support. If it holds, meaning buying pressure comes in as we come into it, more than likely you'll make it to that next level. So usually we like to see this on a 4-hour at least, just because obviously those are way stronger levels. But if you're looking more for the intraday trades, then the 15-minute would be sufficient. And so yeah, really again, we want to see this more on the 4-hour, a break above, come back to retest basically what we saw in the intraday chart, just on the longer term time frame, and that would signify, if we can do that, that we will most likely push in time to 105. Now if we break that and we continued further, we would then be looking at 170/175. And again, another key level, just because you got the first deviation on the 1 year and the second deviation on the 6-month being so close together, that would definitely be a key level of resistance. Then if we broke that and continued up, we'd be looking at 250, 325, 470, 775, and $10.85. So these would be the key levels that we're focusing on. We can't really give you any support levels just because this stock has sold off so much. I mean, it was at $16 near enough a year ago, 20 cents now. And because that means the stock has sold off so much, there is really no deviation levels to go off. So really, if it continued to sell off, it would just be the key psychological levels, meaning the 20 cents, the 15 cents, 10 cents, and 5 cents. And really, don't want to say it's unlikely, because on this kind of stock, seeing it's at 20 cents from 15, really anything's possible. You could see it spike to $2, you could see it crash down to 5 cents. Really, there's no saying where this stock will go just off that. So how we would look to trade this, or if I was personally looking to trade it, the way I would be looking to do it is by really just trading these levels. So if you're breaking, and for example, I mean here, you broke it, come back for the retest, you can look to kind of scalp it long or day trade it long. I mean, off here we can kind of see what kind of bounce we would already have gotten. I mean, an 8% bounce, obviously you would have been locking in profits coming in. Oh, if you're already up 8%, you're going to be locking in some sort of profits, but that's how we would really use these levels. It's not something I would really be looking to hold overnight, just because if a stock can go from $16 to 20 cents, there is a fundamental reason, and really it kind of just shows you that fundamentally the company is weak, or at least investors don't value this stock. So yes, because it's so cheap, you may get it become a kind of a gapping stock. So occasionally you may see it gap 50, 100% and then crash back down to this level. But I wouldn't be too optimistic considering the current market conditions, going on to a macroeconomic outlook. But then also, in that kind of environment, really, these are the stocks that perform rubbish. You don't tend to usually even see gapping stocks. This is a strange market to be in. We got very high interest rates, but we're still seeing the small cap stocks gap, which you don't usually see in these weaker markets. So it's an interesting environment to be in, but do be cautious if this is something you are looking to hold long overnight, because yeah, really, there is a lot of risk associated with these kind of stocks. And there's always going to be risk. I mean, if a stock goes from 16 to 20, again, there's a reason. So do be cautious if you're holding this long term. Hopefully you have a fundamental to be holding it if you are looking to hold it longer than a day. But yeah, if you're just looking to day trade it, then these these levels will be all you really need. Just trade the levels as both support and resistance. Play the pullback, the original touch you can usually get, and then the break and the retest. Anyway, hope you enjoyed the breakdown. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.